Hey guys, Matt Yates here with OregonHomeBuyerPrograms.com with another informative video for you guys. This is probably one of the more important videos that I put together so far, especially if you're seriously looking to buy a home right now. You really need to listen up. Now this video will help you be prepared ahead of time before going to speak with your mortgage lender, which is highly important. And as always though, don't forget to comment on this video. Let me know how you liked the information. Tag a friend possibly that's looking to buy, and share so that we can continue to help make the home buying process that much easier for everyone that's involved in these transactions. Now this video I titled, "What documents do you need for a mortgage?" Very basic, but important. The most common question that I get asked is, what documents do I need to give my mortgage lender for an approval? Now, this is a question that honestly includes a lot of follow-up questions in order to give an accurate answer, but I am going to try to do my best to answer this in this short video, so continue watching. The things that you will always need to provide are, for one, a government-issued ID such as a driver's license or a passport, or documents showing that you're a legal resident alien in the U.S. You'll also need a copy of your Social Security card to pull and view your credit. You'll also need proof of your down payment, which must be seasoned, aka sitting in the bank for 60 days, and is shown through providing the last 60 days of your bank statements. Now, this could be your checking or your savings accounts. Now, if you're looking to have your down payment gifted to you by a blood-related relative, the funds still must be sitting in their bank account for at least 60 days. Lenders do not like money that just comes out of nowhere for obvious reasons. They're wanting to avoid running into any money laundering or fraudulent schemes. Okay? Now, you'll also need proof of your income. If you are not self-employed and you collect W-2s, your mortgage lender will need your most recent 2 years of W-2s and all pages and schedules of your last 2 years' tax returns. You'll also need to provide a copy of your last 30 days pay stubs from your employer. Now, for a W-2 employee, you will need to show 2 years of your employment history to be approved for this mortgage. Now, they do not necessarily need to be the same job or the same industry. However, mortgage lenders will want a letter of explanation to the inconsistencies. This is not something to be overwhelmed by, and never assume that you won't qualify, okay? A good mortgage specialist will guide you here and tell you what you need to say or do in this letter. You are showing your taxes, W-2s, and most recent pay stubs because every lender wants to match up and verify the income that you're claiming. Now, if your income is a regular part-time income, you still need to use this to qualify for the mortgage. You'll need to at least provide 2 years of income history, again, verified by your W-2s, taxes, and pay stubs. You'll also need a letter of employment that states that you are guaranteed a certain number of hours at a specific rate of pay. Now, if your part-time income is occasional or irregular part-time, the lender will average your past 2 years for income typically. Now, if your employment is seasonal, like construction, landscaping, fisheries, you must have proof of consistency by way of any of your W-2s, taxes, or pay stubs. Now, the income should be regular and expected to continue in the future. Now, in order to use the variable types of income to qualify for a mortgage, think tips, overtime, bonus, dividends, interest, commissions, you will be required to provide 3 years of W-2s typically and tax returns. And again, this is for the lender to see consistency and a pattern in your overall income. Now, self-employed income, this one is common these days. The most common documents needed to qualify a person who is in business for themselves are 3 years of tax returns, including all schedules, profit and loss statements, and any other financial statements, etc. Okay? I do recommend having these available before you speak with the mortgage specialist. Now, all of these documents may be asked for as traditional forms of income and employment verification. Okay? Now, if you are self-employed without traditional forms of income verification, it is much harder to get approved for a mortgage, but it is still possible. Lenders do prefer this type of income verification, or they refer to it as stated income. Now, in order to use stated income, you will need to provide your most recent 3 years tax returns, profit and loss statements, again, financial statements, business bank statements, etc., and the lender will want to verify that your taxes are up to date. Now, if you're putting less than 35% down, most lenders will need written confirmation that you've at least had 3 full years of continuous self-employment income. Now, these letters usually need to come from a CPA or a tax attorney that has helped you file your income on business letterhead as well. Now, let's talk about permanent and non-permanent resident aliens. Permanent resident aliens must provide a social security number and your permanent resident alien card, which is typically I-551, but you can still qualify for a mortgage under the same U.S. guidelines. Now, for non-resident aliens, meaning you're a non-citizen of the U.S. but have been granted the right to live or work in the U.S. for a specific period of time, also they can be under the same qualification guidelines as a U.S. citizen, but require documentation such as copies of your passports, your visas, or other residency status or employment documents. Now, you must have a valid employment authorization document or an EAD, and a minimum of a 2-year U.S. residency is required. Your mortgage specialist will be able to outline more of these specifics for you, so make sure that you do ask. Typically, you'll need 20% down or more, and you must be able to show if you can provide 35% down payment and show that you have enough funds to pay your mortgage for 12 to 24 months so that you can qualify for the mortgage with no income verification. You will need to show a money trail for your down payment and supporting funds. Now, most lenders will also require a letter of reference from your bank in your home country. There are also a lot of non-traditional forms of income that are worth mentioning and talking about. Spousal or child support incomes are definitely one of these. Now, in order to use child support or spousal support as income, you must provide a court order and or legal agreement showing how much you're being paid and if there is an end date. Even if child support is ordered to be paid beyond the 18 years or when the kid turns 18, this will put it into perspective, most likely to be considered still. Now, this is different, however, if your child support is ordered up to a certain age without the child being required to be continuing their education. Although rare, it does happen. Typically, child support is only ordered to continue beyond 18 if the child is going to college. Now, from a lender's perspective, there does need to be 2 years of continued support payments, meaning the child must be younger than typically 16 unless court ordered as mentioned above. Now, in order to use pension income to qualify, you will need to provide your last 2 years' tax returns, 3 months of bank statements to show direct deposits of the pension income, and your award letter for the income. Now, disability pension can be used if it's confirmed to be a lifetime benefit. Now, let's talk about rental income really quick, another common question. In order to use rental income to qualify, you must have a current lease agreement in place with your tenants. You will need to be claiming your rental income on your taxes as well. Now, if you're purchasing a rental income property, it may be possible to use a portion of the future rents to calculate and offset the debt to income ratio when qualifying. Typically, a lender will require an appraiser to do an analysis of the market rents in the area when they're appraising the home, and a percentage of the average market rents will be used in the calculation. Now, all of these requirements are what is normally expected. However, each deal is different and every client is unique, so sometimes exceptions can be made to some documents if a lender can support the exception with other documents. Now, if you're not sure, take the time to contact a mortgage specialist in your area. Even if your realtors don't always know what is needed for the laws and consistency and everything that's changing, you need to follow up with the lender. And remember, if you're putting less than 20% down payment, the mortgage must be default insured, which is what they call private mortgage insurance. This means you will have an extra premium added to your mortgage payment each month. The payment difference is usually quite small, but it is still there. So make sure that you ask about this when you apply for your mortgage, okay? Now, that's all for this video, guys. Thanks for sticking around to the end. And don't forget, again, comment, like, share, click on the link around this video, take your 60-second quiz and see how much you can afford to get your pre-approval letter and give that to your realtor. Get out there and start hunting for a home. Have a great day, and we'll see you guys on the next video.